Hello and welcome to this new episode of AI and Digital Trust, LinkedIn Live series, future proofing your board with Khwaja Sheikh, CTO of IBM, and Manoj Agarwal, founder and CIO at Tetranoodle. So today we are honored to have as our guest Dennis Lockhart. So Dennis, his career includes time in the private sector, academia, and the government. From 2007 to 2017, Dennis was the president and CEO of the Federal Reserve Bank of Atlanta. In this role, Dennis served on the Federal Reserve's chief monetary policy body, the Federal Open Market Committee, FOMC. He is currently a distinguished professor of the practice at the Nunn School of International Affairs at Georgia Tech. He serves on a number of for profit company boards and non profit boards and advisory councils. In 2017 and 2018, he spent a year as a senior fellow at the Mossavar-Rahmani Center for Business and Government at the Harvard Kennedy School, where he studied U.S. national infrastructure policy. Before becoming a central banker, Dennis was a member of the faculty of Georgetown University's Walsh School of Foreign Service, where he chaired the master program concentrations in global commerce and finance and international business, government relations. He also has an adjunct professor. He also was an adjunct professor at Johns Hopkins University School of Advanced International Studies. Simultaneous with these teaching roles, he was chairman of the Small Enterprise Assistance Funds, a sponsor of emerging markets private equity funds. Earlier, Dennis was managing partner of a boutique private investment firm with activity in Africa and Latin America, and president of Heller International Group, a Chicago headquartered financial firm with activities in commercial finance in Europe, Asia, and Latin America. In 2000, Dennis chaired the advisory committee of the US Export Import Bank. At the beginning of his career, Dennis held various positions, both international and domestic, with Citicorp, Citibank, and he worked in Lebanon, Saudi Arabia, Greece, Iran, New York, and Atlanta. Dennis was born and grew up in California. He was educated at Stanford and Johns Hopkins University. He also attended the senior executive program at Sloan School of Management, MIT, and served as an officer in the U.S. Marine Corps Reserve. He holds an honorary doctorate degree from Georgia State University. Wow, welcome, Dennis.
And Manoj, one more thing I want to tell you that is still reminds me. I met him at the Fortune Impact Conference where he left after
Manoj,
the.
thank you very much. It's a long introduction because I've lived a long time. So I wish I were younger and had a shorter bio.
Wow, you have accomplished a lot, I'm sure, even when you were young.
Yeah, the one incident I remember is after his discussion at Fortune Impact Initiative, I met Dennis when he was still in the green room, and the security was around him, and he was literally letting the security to meet me in person. It's like a genuine humility is in his DNA. That is the hallmark of the leadership. That really keeps me in my memories, in terms of how empathetic he was on. Thank you, Dennis, for spending time with us this evening, making this evening blissful. And Dennis, you have led through several economic shifts throughout your career, including your stellar corporate career at Citi and stints at Lebanon and Iran, where you literally saw the global intelligence. And most recently, you were the CEO and president of the Federal Reserve Bank of Atlanta, which is essentially 1 year before the financial crisis, where you literally saw the financial crisis in action. So your wisdom, your point of view is very valuable for the LinkedIn audience that we have here. That includes board chairs, lead directors, CEOs, and value creators. What do you think in terms of how businesses are leveraging modern technology to face the headwinds like inflation, supply chain disruption, changing demographics. Like America is having a lot of baby boomers, while China is having younger populations. They don't have enough people to support their productivity, etc. So, what kind of advice do you have?
Well, I think there's a lot of discussion of resilience in companies and resilience in our economy. And I see an intersection between emerging technologies, particularly artificial intelligence, AI, and that resilience. And I'm very hopeful. I believe that AI can help companies speed decision making, be more agile. I think the word agility is extremely important in these times because we're dealing with so much uncertainty. Things change every day, quite literally today. At least potentially, the tariff situation changed with the court decision. We'll see how it plays out, but business people are dealing with daily change in strategic matters, and that's very difficult. But I do see technology helping many organizations deal with making tactical pivots and moving quickly to adjust to change circumstances. So I think that is going to be a payoff from this AI era that we're in. Our companies should be faster on their feet, is what it amounts to. And that comes from information flows that can collapse the time it takes to make a decision, and also the use of AI augmentation and automation in helping execute decisions once they're made. So I'm hopeful that we're seeing tools emerge, Kwaja, that are going to make us resilient to all the winds of change that we're dealing with in terms of public policy.
Yeah, this is fascinating, Dennis. If you look at the history of economy, there was a days where government was acting as a catalyst to drive the growth, and then in the last few decades we have seen the industry driving the growth while the government was behind. Do you think we have reached a situation where government and industry should work together to drive the change, or do you think this is just the industry play to drive the change in the current era?
Well, we are also in an era of a renewal of or more use of industrial policy, and that's not just the United States; it's around the world. For many years, industrial policy was frowned upon by most economists, and for that matter, politicians didn't really believe that government could take the lead in making things happen. But the atmosphere around government-led or government-supported industrial initiatives has changed, and certainly the Biden administration invested a great deal of money in chip fabrication in the United States, and I try to follow it as best I can. Apparently, it's coming on stream, and it's a real thing. And there are strategic reasons why making chips in the United States is important and is part of our national security set of considerations. So I think government can play a role, but the fundamentals of our economy are first the consumer. And I think that to some extent is driven by the demand for labor and therefore a relatively stable employment situation. We shall see in the coming months, but it's certainly been impressive how sound and healthy the employment markets have remained, even with the uncertainty that's in the air at the moment. So you have strong consumer, that's the core of the economy. And then you have growth factors, and AI particularly is being looked to. I don't know that we can measure it yet, but being looked to as a source of growth and particularly a source of productivity growth. And that may turn out to be, from a fiscal point of view, a savior for the U.S. economy if we can get the productivity gains out of the new technology, along with sort of the fundamental momentum of growth that the U.S. economy has experienced in recent years.
Great, great. Let's continuing that theme. So as the productivity rises, obviously the GDP will rise, and the nation will benefit. But I just read a report from the CEO of Anthropic, that they are the major AI players, and he's saying that within the next 5 years, 10 to 20% unemployment will be experienced, and the entry level white collar jobs will be eliminated because of AI. So the question is, like, how can organizations, communities, governments invest in their people and prepare for this short term uncertainty that will come as the productivity and automation rises? I mean, there's going to be some impact on the employment. What are your views? Like, is that something, a scenario that you anticipate?
Yeah,
Go ahead. Go ahead.
You're breaking up a little bit, but I know the thrust of the question. First, let me say I'm a bit more optimistic than some. I'm not going to argue with the CEO of Anthropic. He's closer to the capability of the technology and therefore the threat of the technology than I am. But I'm more optimistic that AI, on balance, will augment human labor as opposed to replace human labor. Certainly, there will be people who are affected, and certainly there will be jobs that are eliminated. But at the same time, there'll be an enormous number of jobs that are created by the capability of AI enhancing or augmenting human work. And the Anthropic study that was done recently, that was presented at Stanford, pointed out that a goodly percentage of cases that they were able to inspect through their own LLM appeared to be not necessarily automation, but augmentation of tasks, or augmentation of work done by humans. So clearly we need to try to maximize that benefit of this emerging technology. The question is, what should leaders be thinking about in terms of either helping their workforce make the transition, or actually perhaps even helping individuals? And I think first, there's going to have to be training on how to use the technology. I don't think it necessarily comes naturally. I'm not immersed in it, but I use probably every day an AI, generative AI chatbot of one kind or another. And I think a lot of benefit comes from simply knowing how to pose questions, pose problems, and so forth to the system in order to get the most out of it. A few days ago on not on Squawk Box, but on CNBC, there was a speaker who seemed to be quite knowledgeable in the afternoon, saying that he believed that much of what the AI will be used for are things that are not actually done in organizations today. And projects are not done because they're too costly. And they were too time consuming of people. And he made the point that now you can give an assignment to an AI platform for a study to come back not in seconds or minutes, but to come back in a week or 2 weeks with a very thorough discussion of what the options are for a company. And I was impressed with his argument. He said these are projects that are not being done because they cost too much for companies to do.
Mhm.
That's an extreme form of augmentation of at least of an organization's capability, and I think that's very hopeful. So training in the technology, help in making transitions. I also am a big believer that leaders today have to have their eye on the aggregate and to some extent individual mental health of
Mhm.
people who are going through stressful times. The transition that is represented by AI is going to be stressful. And then the economic circumstances that we may be in because of tariffs, because of the prospect of stagflation, are also going to be uh, stressful on workers. And I'm aware that this is an emerging field that some companies are beginning to monitor the cognitive resource of their companies and try to put in place practices that are, let's say, brain healthy in the workplace, that help the organization preserve the talent base they have and the cognitive skills that they have embedded in their organizations, and at the same time, in a preventive way, pay attention to stress levels and such, so you can navigate these difficult and challenging circumstances. Some positive in terms of AI transformation, and some negative in terms of difficult economic times that might develop in the coming months. So those are some thoughts on what leaders can do.
Mhm.
Yeah, this is fascinating, Dennis. I think this reminds me that tone at the top matters, especially at IBM. Arvind Krishna said, we have to use our own technology before we tell our clients to use it. And that mantra resonated within IBM, where we literally saved $3.5 billion in productivity savings alone in 2024. All those savings were redirected to the innovation, and that innovation drove to build the better products, and better products lead to better happy customers, and happy customers leading to more referrals leading to increased earnings growth rate. So it's interesting, how this automation and augmentation plays a vital role in the AI journey. Now, reflecting on the shifting trade policies and global tariffs, I would like to hear your take on the impact of America's competitiveness and innovation in the context of two examples that I will share. The first example is the European Union is very stringent in regulating American technology companies like Meta and Google for violating the privacy laws through Digital Markets Act, while at home we are loosening our regulatory standards across the board, both on the tech as well as financial services industry, etc. And the second example is, uh, at home we are regulating and restricting the export controls in the semiconductor industry, where the companies like Nvidia is getting impacted. And as I always say, innovation thrives on uncertainty. Innovation thrives when there are business problems. Now, in the context of China, a company like DeepSeek came along, where they were able to show a better AI model with a lower cost and lower energy footprint. So, if you look at these two examples, where do you see America in terms of global competitiveness and innovation in the context of shifting trade policies and increased focus on global tariffs?
Well, again, I'll on balance, I will present an optimistic view. I think the innovation economy and innovation ecosystem of the United States is unparalleled and likely resilient to multiple challenging futures. As long as we have hubs of talent, Silicon Valley is the classic example, but there are many hubs of talent, and a healthy venture capital industry and capacity to fund startups, and importantly, a productive R&D environment, and that's to some degree being challenged at the moment. But if you have those ingredients, I'm confident the United States can continue to be the leader in particularly technology innovation. I would also point out that there are concerns about dangers from this technology that have been described as existential and such, and I think that should not be ignored, but nonetheless is something that we have to pay attention to and find a way to govern. So governance structure around the technology, I think, must emerge. I've seen and heard some suggestions and formal proposals, and I think we'll get to a point where the downsides of the technology can be minimized. I heard a presentation recently from a former Biden administration official whose job it was in the White House to follow the emergence of AI. And he said the United States is really substantially ahead of certainly Europe and even to a great extent China. So it's a question of preserving the lead. AI should be viewed to some extent as not necessarily solely a competitive factor between countries or between economies, but a boon to the whole world, and therefore finding ways to cooperate around the application of this technology I think shouldn't be abandoned. They should be part of the picture. CEO of NVIDIA yesterday, and making some comments about his company and about the China question, pointed out that the biggest population of developers in the world is in China. Therefore, we want China to have a healthy AI culture and environment, and because they can contribute to the world through development of AI programs and applications. So I'm not sure it's totally a zero-sum game. I think it certainly should be viewed as a positive-sum game as much as possible.
Yeah, this is fascinating, Denise. I think what you are saying is the world is interconnected, where it's for example, at IBM, we are very big on open source AI. We want to make sure everybody is a value creator, so that 1+1 is equal to 3 kind of a mindset. And maybe if I can ask you one tough question here before Manoj asks the second question. At the boardroom, we talk a lot about the importance of anchoring noble purpose with the business strategy to make sure that multiple stakeholders are considered in terms of the decision making. If you look at the previous administration, you might have heard about Lina Khan. She was very much consumer centric to make sure consumer rights are protected. She was very hard on the consumer centricity. Like, for example, we open an app today and pay for per month, and then when you come back to cancel it, you don't get easy access to cancel it. It's a couple of days to get it canceled, then you forget about it. Some kind of a bad practices. And what is your view? Is she going too harsh in that context, or do we need that kind of a due diligence to make sure consumer rights are protected?
Khwaja, I'm not sure I caught the thrust of your question. So can you just repeat it
Sure,
or
sure.
shorten it and repeat it?
Yeah. So basically, how much the policy makers should look into the consumer rights as we expand the digital
Mm-hmm.
capabilities. You know, Lina Khan was very aggressive in terms of
Yes.
the regulating the companies, especially the digital companies, in terms of how they need to practice it. I was wondering, was she right in terms of the way she was going? Or is it at the optimum level in terms of regulating that, or do you think we just need to open the door, whatever the companies do on their own? Because consumer rights are equally important as employee rights, etc. And at the same, it's not necessarily that you only need to look into the business, implications.
Well, as a digital technology, which will be used by individuals, consumers, students, professors, people working in companies, um, data protection, I think, is going to be central, and and we want it to be regulated in a sensible way. I don't have, great insight into where the line should be drawn. The European community, on balance, tends to be highly protective of privacy, and the I think we're going to see the emergence of what's now being called sovereign AI, which is AI systems that are adapted to particular country cultures or regional cultures, with the preferences those regional cultures have in terms of privacy or in terms of consumer protection. I won't comment on Lena Khan's activities when she was in office in the Biden administration, except just to say that it's early days, and we're going to have to work these things out in a way that balance the the trade-offs involved in order to get the most out of the technology. And I'll just leave it at that.
Great. So I'll circle back to one of the comments you made earlier about training and upskilling. And obviously, you have a unique vantage point into what the industry is doing, what the leaders are doing. In your opinion, at the board level or at the senior business leadership level, do people have enough knowledge? Are they doing enough to learn about this technology, to learn about AI, to learn about cybersecurity, blockchain? Um, are they doing enough to prepare for what is coming?
Very good question. I only sit on a few boards, and I don't have insight into every board, but I'm generally aware that at the board level, AI strategy is now becoming an important topic of conversation. Companies are grappling with how this technology is going to be applied in their particular business. I was in a conversation with a risk management executive of a major Wall Street firm just yesterday. And this person commented that lots of meetings now about AI and how it's going to be applied to the risk management function in that particular company. What's the role of boards in this? Obviously, transformative technology, which have big strategic questions associated with it, have to be engaged at the board level. My guess is that, as in so many other major technological transformations, there will be a whole industry that develops to train and inform directors and senior managers. Since I went to Stanford, I have some young friends who graduated from Stanford, one of whom started a company to help translate technology, particularly AI technology, into something that the C-suite can understand, because general managers at a high level don't necessarily have the depth of background to understand the technology. I thought it was an interesting business proposition, and I haven't checked with him recently whether he's gotten it off the ground or not, but he got funded at any rate. So clearly there is a need there. So my guess is that most boards are now beginning to ask management the questions, what are our AI strategies? How will it apply to our particular business? And, what are the strategic questions that we must grapple with? And I suspect that's going on really in almost every company, particularly non-technology companies that are looking at this technology as something that may affect their business.
So that's great. Well, it's quite positive that they are making this progress. But I'll continue with another point that you mentioned about mental health and the stress levels that come with whenever these kind of big transitions happen. So one of the research areas that I focus on is the impact of AI on the human mind and human psychology. Do you like in your perspective, do you think there is a link between mental health and AI, and whether it can actually help us improve mental health?
Good question again. I can certainly see. Let me start with the basics. From my experience in multiple organizations over the years, I think people want to have meaningful work that they see contributing to the success of a company. They want to have a sense of where they fit in the overall enterprise. They also want opportunities for personal growth, and they don't want to be in dead ends. So yeah, that's the way I think most people feel at the middle level or the junior levels of companies. And I think we can expect that this technology will free people to add meaning to the work they do. And they will see that by the automation of basically fairly routine tasks, and by the learning on how to use the technology, they will be able to make an impact in a company that's greater than conceivably they could before this technology came on stream. Mm-hmm. That is good for mental health. So in that respect, I think I would be very positive. At the same time, there is no question that major transitions, transformative technologies are threatening, and they are stressful. And we're going to have victims, I think, from this transformation. And it will be the job of senior managers to, as I said earlier, really to monitor the stress levels in the organization for the very self-interested purpose of avoiding attrition, avoiding people leaving because it's too stressful. And I think that's going to be part of the responsibility set of CEOs and senior people, is to stay on top of the mood of their companies as they go through this technology transition.
Yeah, this is fabulous, Dennis. And Manoj, look for the LinkedIn Live if there are any questions that are coming from the audience while I ask this question. The comment that you made, Dennis, earlier, it reminded me of David Brooks' work around how we have built the education around resume virtues instead of eulogy virtues. We are losing the importance of values at the very young age in terms of the education. Now, when we talk about financial literacy and AI literacy at the boardroom with the Sarbanes Act, the boardrooms are well versed in terms of the financial literacy, but in terms of AI literacy, they still need to catch up. But at the population level, at the younger workforce level, what I notice is there is a gap both at the AI literacy as well as financial literacy. You may get the kids straight out of the college, they are very poor in managing their money in terms of how they need to invest and how they need to, China is very good in terms of young people saving. A lot of people in China, because of the culture, they save a lot. They save too much that it has other problems where in terms of the impact to the economy, while in America we don't have the savings habit. And then when you double down with that in terms of the education that they are not getting financial literacy to manage their own money. Maybe if you can put some context, applying the Fed Reserve hat, are we doing enough, or how can we help the young students, to get that financial literacy so that they know how to manage their wealth?
Well, financial literacy education should start in high school and is starting in high school in many high schools. And I think even to a degree, it's something that companies can provide as a benefit, but it helps reduce stress because people understand how to manage their finances better. It is remarkable how many people really, because of a lack of financial literacy, get into some trouble, and it inevitably pours into the workforce or into the workplace. It inevitably distracts people and reduces their productivity for their employers. So financial literacy is an important element of keeping a healthy workforce and healthy workplace. I think there are a lot of tools available, and companies are making those tools accessible, I think, to many employees. And it's an educational factor that should be taking place as early as possible, high school and certainly at the college and university level, as just to equip people to be responsible adults and to manage their own lives in the optimal way. So I'm a big supporter of financial literacy programs.
Thank you.
There are also we can go on
Sure.
to other subjects. So
Yeah, I think
I'll
this
leave it at that.
has opened me another item. The business model implication in the financial services industry. For example, in China, there are financial services companies where they are monitoring how their activity in social media, etc. And based on that activity, they are making some credit decisions. While in America, we still have that old model of credit history to see how they are spending money, etc., and then making those decisions. I know Fannie Mae and Freddie Mac, they are working also to make sure how can we make better credit decisioning in the context of Gen Z. So do you see that financial services companies like Bank of Americas of the world should look at long term how they build their credit products so that the Gen Z is happy in terms of how they get their decisioning, etc.? Or do you think that the global south is going too far in looking at activities that they are doing to make that credit decisioning?
Well, back to the financial literacy question.
Yeah.
I think at an individual level, there are now more and more tools, and no doubt these tools will be refined to assist the person at the point of a financial decision. And this is quite dated, actually, but I was aware of a company that was that was essentially giving you a green light or red light if you could afford a particular purchase based on your bank account that takes a look at your financial situation and makes a recommendation. Yes, you can afford this, you cannot, so that people don't end up digging themselves into a hole. So I think we're developing the resilience around consumer decisions and financial literacy. I'll leave it at that.
So continuing, that's fascinating that the technology is entering our personal decision making, which I'm fully anticipating it's going to happen more and more. But at an organizational level and a government level, most of the world's financial transactions are already automated. Like I think statistically, 80 to 90% of the trading that happens is already automated. Decisions are made by machines. But as strategic decisions are made by machines, do you anticipate that there's going to be like a CFO, an AI CFO in the boardroom, or an AI Federal Reserve governor who will make these type of decisions? And if so, how comfortable are you, given that you have a lot of experience in understanding these dynamics, that machines will be able to assist us making these strategic decisions?
Well, I think it's important, and this is probably pretty obvious. Is no one should be put in a position where they do what the machine tells them to do.
Mm-hmm. Mm-hmm.
I think we need human oversight in all of the major recommendations or decisions that come out of AI programs. And so one of the skills, and we talked about this a little earlier about what training could focus on, one of the skills should be the skill of review and validation, the skill of oversight of an AI augmented business process. It strikes me that is a skill set, and it's a skill set that needs to be developed so that the proper relation of human oversight, machine learning, and machine information and decision support,
Mm-hmm.
that relationship should always end with human oversight. Having said that, we're going to find, I think, many domains in which the machine can just do a tremendous amount of the tasks associated with the process. And already on factory floors in the United States, the job of being a first line employee on the factory floor in many cases has evolved from the doing to the oversight role of tending the robots and paying attention to how the process is working, as opposed to actually putting hands on in making something, because robotics have replaced humans in so many areas. We've already seen that in what we would call a blue collar work environment. And I think we're going to see that oversight, supervision, tending the machine, paying attention through monitoring methods of error rates or problems developing. We're going to see that become important among first order employees.
Yeah. And how comfortable will you be, like given you have served at that level, making these strategies, because there's a lot of human empathy needed to understand what is the impact of a certain decision, right? Like, so even if there is oversight, as humans we tend to be lazy. If some algorithm gives us a decision, I mean, you can expect some people to get lazy and say, okay, yeah, let's just go with this decision. But given your experience, what level of comfort will you have with something like that?
Yeah. I think Dennis, where Manoj is going, it maybe you can also give some.
Well, comfort.
Yeah, go ahead, Dennis.
Yeah, I was simply going to say comfort will accrue with time. And I think we are in early days still with the emergence of this technology. And therefore, for the next few years at least, as we gain experience and see the elaboration of the technology in so many different forms of work and production and such, it would be very sensible to maintain a little bit of healthy skepticism and review the major output of AI programs and make a human overlay, put a human overlay on it. I think with time, there'll be more and more confidence. And if you want to talk in a visionary sense, I can imagine a more distinct division of labor in our economy in the future between machine work and human work. And human work, many forms of human work will be relational. That is, the kinds of things where humans have to relate to someone else: education, healthcare, social services, customer relations. These are all examples of where I don't think you're going to substitute a machine for one human dealing with another human. But I think you can also imagine at the same time production facilities that have very few employees because they are automated processes and they are run by AI programs or substantially enhanced by AI programs so that the human input is minimal, but the productivity is substantial. And I can imagine that economy developing in the future. You know, the old comment about give to Caesar what is Caesar's and such. It'd be let the machines produce many things and the humans do what are uniquely human kinds of needs and skills.
Yeah, yeah, Dennis, I think there's a lot of talk around media these days around Fed independence, whether somebody can make an independent decision or not. I know those governors are appointed for a 14-year term. Every 2 years, a new governor comes in, so that there's no political decisions that are influenced. Maybe if you can give 1 minute view on, what a day in the life will look like when the Fed Reserve is making a decision around interest rates, whether to increase or decrease. There are several economists in the room who are making decisions. How does that decision making happens? Because something literally applies on the boardroom as well. Those are the crucial conversations where the interdisciplinary thinking is needed so that the right decisions are made without any blind spots.
Well, my experience is from a few years back, so I don't know what goes on in the room today, but I don't think it's changed dramatically from when I was a Fed president and on the Federal Open Market Committee. It's very much a consensus process. And the leader, the job of the leader, in this case, Chair Jay Powell, is to forge a consensus. And that consensus may involve a fair amount of disagreement on fine points. But interestingly, because there is a deadline, and that deadline is noon of the second day of a meeting, the committee always gets to a working consensus and makes a decision, which is, in today's world of observing government, that's a very refreshing kind of thing to see, but they always get to a decision. So consensus decision making that is tolerant of different perspectives, but does get to a decision that is a workable, we hope, a workable policy position. That's the way the system tends to work. And everyone who is a participant in the committee gets their voice heard. And I think that also is important. So everyone has an opportunity, a few minutes, to both opine on the state of the economy and also on what the policy decision should be. In the case of the Federal Reserve, they spend a fair amount of time in the meeting on communications questions, because how this particular agency communicates to the world has a big influence on financial markets and a big influence ultimately on the economy. So there is a fair amount of time given to the word choice that goes into communications, and it's done as carefully as it can be in order to essentially signal or to induce the right conclusions. That doesn't always happen, but that's the objective. So that's how those meetings work. And I guess my key point is it truly is consensus decision making.
All right. So, we have been talking a lot about AI and how it is going to digitize a lot of decision making and all of that. One other technology, which is blockchain, is going to digitize trust, right? And being governor at the Federal Reserve, primarily the trust is in the currency, in the economy. Now, as these commodities get digitized, do you anticipate a new type of economy emerging? Because hard currency may give rise to a digital currency or cryptocurrencies. What kind of role do you think these digital currencies will play in the economy moving forward?
Well, let me give you a little bit of my personal history on this, personal journey, if you will. When cryptocurrency, which is now 15 years old, but when cryptocurrency emerged, and when I was at the Fed, I got questions about it all the time. I have to say I was pretty skeptical of it, and I would have defined myself as a crypto skeptic. I was invited to join the board of a major payments company's subsidiary that was focused on cryptocurrency and blockchain use. And through that experience as a board member, my views have changed. So my current view is this is a very high potential technology in the payments business, in the payments function in an economy. So the payments application, I think, is very exciting, and it will both speed payments and take cost out of the whole process of money exchange associated with business transactions. So I see very clearly and very much support the payments application. I am still skeptical as a speculative asset of whether it's sensible for people to invest. But we live in a free country. People can invest in speculative assets. The asset does not necessarily have to have an economic usage. And that's exactly what's going on. And, it's not for me, but it's certainly, I think, let's just say it is an activity that is not going away anytime soon. So it's a dimension of cryptocurrency that I have some doubts about, but that's more personal than societal. And if people want to invest in Bitcoin or whatever, certainly we should allow that to happen. I also make the distinction between freely floating in terms of value cryptocurrencies such as Bitcoin and stablecoin. The payment system is going to be built on stablecoin, which is backed by a supposedly a risk-free or very, very low-risk asset like U.S. Treasuries. And that's the way the payments application is going to emerge, and that is by the use of and perhaps the replication of stable coins in the system, so that have that kind of backing. That gives a lot more certainty in terms of value than the more speculative cryptocurrencies. The blockchain itself, I think, is very exciting technology because it is basically public and it is available and transactions are transparent. You don't always know from the name of the party to the transaction who's involved, but the transaction itself is in the public record. And importantly, the blockchain can take the cost of some intermediaries out of the process and just simply make transacting business or making transfers of funds from one party to another extremely cheap, very, very cheap. It practically costs less. So I think there's much to be gained from the continuing development and proper regulation of cryptocurrencies and the blockchain.
Yeah, this is remarkable, Dennis. I think as you see here, as businesses adopt more technology, we need to make sure they're moving fast enough. At the same time, they need to make sure they're moving in the right direction. What kind of leadership mindsets do you think the CEOs and the boardroom needs to embrace so that they're not going too fast and breaking it in terms of the digital trust, or not they're not going too slow where they're hindering the innovation? In terms of the leadership mindsets, maybe if we can give 2 or 3 leadership attributes that you would like to share for our audience here.
Well, you're really referring to pacing, the pacing of change in an organization. And I think clearly that has to be a managed thing. In my own career, particularly in banking, I worked for bosses who slowed down the organization, and I worked for a couple of bosses who made the organization chase them because they were so fast paced. I think it is, to some degree, an art form to figure out what the pacing of change should be in an organization in order to stay competitive, to get the most results out of the organization, but not basically exhaust the organization because the pace is too rapid. So that's something that a CEO really has to think about. It strikes me. What else can I say about that question? The mindset in today's world, leadership at senior levels of companies is explaining context to the organization, interpreting all of the external and, for that matter, internal moving parts, putting it together in a coherent way, and communicating often what's the context in which we're trying to fulfill our mission as an organization. That context is shifting all the time. It's not an easy thing for a CEO to be able to explain, but I think it is the role of senior leadership to lay out that context and to explain it to the organization. I think that mindset of synthesis of information from a variety of different sources in order to explain the world that the organization is operating in, that's an important leadership responsibility. And that mindset, I think, can be developed by senior leaders.
Yeah.
What else?
Yeah.
I there are all kinds of leaders, but I think increasingly, particularly with AI augmentation beginning to develop, teamwork, effective teams, people working together, and now, of course, working together with the help of AI programs that are effectively team members themselves or itself, is probably the world we're entering, and therefore, leadership requires the humility of not knowing every answer, but getting actually some of the answers from AI platforms.
Yeah, this is remarkable.
And I'm excited about I'm excited about the potential for AI enhanced decision making, particularly because of speed. Early in my career, if you were in a quarterly review and a boss asked a question and you didn't know the answer to the question, you typically would say, "I'll get back to you in a week with the answer." Now you can get back in seconds with the answer.
Yeah.
And I think one of the most impressive developments is proprietary large language models or proprietary AI platforms where all of a firm's information is flowing into it, and therefore the retrieval of factual information in a matter of seconds is, at the command of senior people. So these I'll get back to you in a week excuses aren't going to play in the future, because you'll be able to get the information. You'll get the information in a matter of seconds. So, to me, that's great for organizations.
Yeah, this is fabulous, Dennis. This reminds me 3 books that I would like to recommend to the LinkedIn audience here that exactly talks about what you were referring here. One was The Value Creators by IBM SVP Rob Thomas and Kate Soul wrote. That book just got released a month ago that talks about how IBM has saved $3.5 billion in the productivity savings alone. Then the other 2 books I recommend is around the importance of applying the ethical technology. So one was on AI Con by Emily Binder and Alex. Another one was Empire of AI by Karen Howe. I think these books literally discussed about some of the topics that we discussed today, as well as the wisdom that you shared about it. And Manoj, I think, how are we doing on the time?
I think we are quite over time now. So we are, 3 minutes over 1 hour. I'm really thankful for Dennis for your valuable time. Thank you so much for all the wisdom. There were a couple of questions about quantum, but I think we can just answer it through comments later on LinkedIn, because I think we are over time now. So.
Yeah, thank you so much, Dennis. It was you made this evening very blissful.
Happy
really
to give you
precious time with
any
us.
follow-up you require. I'm happy to provide.
Thank you so much. Thank you.
Thank you.